Hello in there. Reporting to you live from the center of the universe, the University of Chicago, Booth School of Business. All right, we've got a good one. We've got a great show planned for you tonight. Hopefully we avoid all technical difficulty, but it's the first time that we've gone live like this. It's me, Michael Neal, the founder of OFFERGOBLIN, former Centerview, former MBA and Master's in Computer Science at U Chicago, current drop-in. And normally with my co-host Ryan Tan, people call the #1 coach in the universe. He's currently away. I'm not authorized to say where he is, but it's very exciting. It's very interesting. He'll be back next week. So today, the show is about what exactly is investment banking. This is a topic that's talked about all the time, but I think less understood. There's a lot of ambiguity to it. I think that part of that is probably some degree of gatekeeping. But we're going to cut right through, all steak, no sides tonight. So, a lot of people know that investment banking is prestigious. That is true. A lot of people know that it is many hours of working. That is also true. A lot of people know that it involves finance, it involves deal making. But what exactly is it that you would be doing on a day-to-day basis if you get into investment banking? And that's what we're going to focus on. So, as we go through this, you can kind of think about whether you think that this is right for you, if it's good. It's important to know all these things and understand these things as you go into the process so you can explain why you're a good fit for it. Or maybe you decide after watching this that it's not a good fit for you. Those are all perfectly legitimate outcomes. Okay. So, there's kind of three things to focus on there. The work itself, what you're actually doing, the lifestyle, the experience of doing it, and the fit, whether that's good for you. Okay. Now, let's jump into kind of the easiest question, which is hopefully this is going to be sort of the cleanest, easiest definition. What investment banking is, okay? So, investment banking is helping companies and investors and boards with major financial transactions, okay? So what that means is the people who run large companies, those people need to make very large, impactful decisions. They need to explain those decisions to their investors, and investment bankers come into play there. A lot of times you can think of it as like a realtor. An investment banker is kind of a realtor who can come in and help you make a good financial decision, negotiating on price and other things. And we'll get more into sort of the actual outcomes that come with the work that bankers do. So, there's three buckets. The first one is buying and selling companies. Okay, that's M&A. That is primarily a realtor role. You're helping people to go and buy a house, aka a company, and you're helping them to understand how to finance that decision and how to make that purchase and what kind of houses do you want, what type of company do you want, and you're helping people also to sell houses. How much can I get for my house? How do I make it look a little better? How do I take better photos? All those types of things, right? So the way that that actually happens, well, we'll get into that a little bit further, but the point being that if you were a large company and you're in a state where you're either going to try to buy a company or sell a company, I'm getting a phone call. That's embarrassing for a live stream. Hold on. Let's see. Let's check in on... Hold on a second. Okay, well, that is a live show, so there are going to be bumps in the road. All right, so getting a phone call, lesson learned, turn on focus mode. Now, where were we? Okay, second thing. Raising money. Okay, so if you're a company, you're trying to raise money, there's a few ways that you can raise money, two primary ways. The first is through debt, the second is through equity. Okay, so either you're going to go ask a bank to give you money, which investment bankers either can help to facilitate that process or be the ones to loan you money, or you are going to sell shares in your company or some type of equity vehicle to investors and take investments. Bankers will help to facilitate both of those things, right? So where were we? First is M&A, second is raising money. Okay, third, handling stress situations. There's a lot of weird financial situations that companies can get into. For example, a company could be in a distress situation. They could have no cash. And so they would need to restructure, basically declare bankruptcy, go through a restructuring process. Another thing is they could be considering different ways of representing themselves financially to investors. Okay, so that would be earnings calls, advising on how to kind of set those types of communications up, and many, many other minor things in between. So the way that you should think about an investment banker is three things. First is a realtor. Second is an actual, like, proper banker and lender for the banks that actually do that. And third, as a advisor in especially stressful, high stakes situations where you could lose a company or things can fall apart. All right, so what is investment banking not? And because this is one of my earliest streams, I have to give a shout out to one of the folks who are here, which is my mom. And for most of you, when you get into investment banking, what you'll hear from your mom, from your grandparents, from your family, from people who aren't in the universe is, oh, I work at JP Morgan. They'll say, oh, there's a Chase Bank in town, right? That is not really what people mean when they talk about investment banking. They don't really mean the sort of like teller and the retail and the ATM and those sorts of the sort of commercial side of the business. Typically, when people are talking about investment banking, they're talking about functionality that faces businesses. So it's sort of, if you imagine the ATM, but for a large corporation, talking about millions and billions of dollars being lent out and managed and things like that. Another thing that it is typically not referring to is actually investing. So a lot of some investment banks, especially bulge brackets, they will own equities. But typically when people are talking about investment banking, they're not talking about trading securities. They're not talking about actually making investments, which I know is very misleading. But there's a lot of terms that you'll find in the finance world which are very misleading, probably up there with politics in terms of the amount of misleading terms that you can run into. So let's go on to the next point. Point number 3. How does the banking machine work? Okay, so what does it actually mean if you're working at an investment bank? And the way that we'll break this down is that we'll go from sort of the top to the bottom. At the very top is the managing directors, the MDs, the senior bankers. Basically, these are like sort of big whales swimming about who have ties to clients. Okay, the top person at Goldman has a relationship with the leadership at many companies, and if they were to leave Goldman, they would essentially, the reason that another bank would want them is because they would bring that body of clients over, right? And the reason that they have that body of clients is a few things. One is that they've just taken the time to build those relationships. A lot of the times they've known those people for many, many years. Sometimes they were analysts together. Other times it's that they've done a bunch of deals together and they just kind of have the dynamic that they know it works. It could be frivolous things like they belong to the same country club, they're neighbors, they're family friends, whatever. And you'll find another sort of add-on here is the reason why there's a focus on bringing people in from target schools, or let's say a school like Harvard, even if that candidate is not necessarily, let's say, the sharpest, is because that person has connectivity to potential future clients and has that sort of, you're kind of buying into that network, right? And that's what you'll see at the top level. You'll see these senior directors floating around with these networks, and you'll see one day, three bankers from Evercore will move over to JP Morgan, and you'll see then, because of that, Cisco and all these other Fortune 500s come over with them in doing that, okay? So the MDs and the seniors, they're really focused on bringing in the clients. They're sort of the top of the funnel, and they bring things down and in, okay? Below that, you have VPs, directors. At Centerview, they call them principals. Essentially, that's a person who is operational, okay? So the MD goes and gets the conversation started with, let's say, the CFO of a Fortune 500 company who says, I want to go and acquire this business, okay? They talk it through, they kind of get the basic idea, and then that goes down to the VP saying, okay, now you need to go and orchestrate and set up the team so that they can build the model, so that they can kind of walk through, so that we're ready for these meetings, so that you can go and create sort of the materials that we need in order to run this shop, okay? All right. Now, the VPs as persons, because I think it's actually probably useful, I actually should go back to senior banker and just explain. On a personal level, the senior bankers are very often kind of aloof in a way. They're sort of like in and out of the office when they want. They go golfing. They do all these things because they have this level of that they're able to bring in money not from their sort of direct labor, but from their relationships and from their sort of knowledge, right? The VPs are still people that are sort of like carrying the load. So a VP is someone who is going to be sort of more like a busybody. They're going to be kind of making sure that things get done. They're going to be kind of the last sort of stand as materials are like coming up and getting ready. And they also start to build into, of course, the senior banker level and things like that, okay? Okay, next one down is associate. MBAs, if you go and do an MBA, you come out as an associate, okay? The associate is sort of like a junior manager, but a lot of times there is a lot of sort of mix between analyst and associate, okay? So those two lowest levels are analyst, associate, and then what we talked about already, VP, senior director, okay? So associate, a lot of times if they come in from the MBA, they're essentially an analyst because they still need to sort of learn the ropes. They still need to understand how the game works. But eventually what they become is the person who's sort of checking the work, like kind of chopping it up and sending it over to different analysts and kind of making sure that it gets done and sort of bundled up. And by the time it gets to the VP, that it's right. So you'll see that as this chain goes up, there's sort of information being sort of gathered and assessed and compressed and set in place as it moves sort of up the chain. And it gets more sort of concise as it goes up. Okay, so the kind of hot shot or of the junior banker level is the A to A. That's the analyst to associate. That's someone who's been promoted. They went through the entire analyst program and then they got promoted to associate, okay? That's a person that is dangerous. That's a person who knows all of the sort of ground level details, but is now trusted to be a manager. And those types of people are really the sort of top junior banker that every firm wants. Every firm, well, I shouldn't say every firm, many firms want. They want their analysts to become associates. They'll pay them very well to do that so that they can sort of manage work, understand work, get it done really well, okay? Now, to the lowest level, analysts, okay? Analysts are like little hacker monkeys that are on mechanical keyboards and use Zins and are just hacking away at models. It's a very technical role for the most part, okay? A lot of what they're doing is going in and updating models, making sure those sort of details are correct. They work the most hours out of anyone. And they're typically very young. So they're typically straight out of college. So whatever that would be, 21 to 24 years old. It's usually a 2-year thing. Okay. So the analyst, which many of you are going to be targeting, is a person who needs to be very disciplined and very quick-witted and very technical and very detail-oriented. We'll talk more in later chats about kind of a little more about sort of what that person is like and what you need to present like. But this is just to give you the levels and to talk about really how the machine itself works, okay? So the analyst is going to do their spreadsheet. It's going to go up to the associate who's going to check it, say this is wrong, goes back, gets done. Associate checks it again, says it's good, goes up to the VP, VP checks it again, goes up to the senior director, goes out to the client, okay? That's the machine. And those details, the project that they're doing, the deliverable that they're doing, we'll just use the case of M&A as an example, would be how much is this business that I'm thinking about acquiring worth? Okay? Answering that question, let's just say. So you can imagine sort of that information flowing as they're trying to answer that question. They're building models, they're building PowerPoints, they're doing things like that. All right, so let's go down further into the junior banker level, because what we're focused on for OFFERGOBLIN, what we're focused on is getting you into banking. So that means you're going to be probably a junior banker, okay? Either an analyst or an associate. And there are 4 things that you need to kind of know or understand about what you're going to be doing and how that's going to work, okay? First is analysis. That is Excel, primarily. There are other things, there are little plugins, there are other things, but primarily that's going to mean building Excel models, okay? And as the season goes on, we'll talk more about the different types of models that you'll build, but essentially what those models are for is valuation, financial analysis, buyer analysis, market analysis. It's going to be different types of charts, different types of quantitative explanation of something related to finance, usually. Sometimes it's not even related exactly to finance, which can be interesting. It can be related to, let's say, the workforce, headcounts. It could be related to semiconductor capacity. It could be related to manufacturing capacity, things like that. Okay, so the second thing is materials. So whenever there's analysis done, and this goes not for banking, but just for anything, whenever there's analysis done, there needs to be some kind of material that communicates that analysis, okay? So that could be a pitch deck. It could be board materials. It could be a script for the earnings call. It could be a presentation. Typically, what this comes down to is either PowerPoint, so PowerPoint slides showing and explaining kind of the logic and how this sort of analysis has come about, or it could be a Word document, like a memo. I guess technically it could also be an email. Consider an email a piece of material. Okay, so all of those things need to be very crisp, simple, direct, concise. They need to be very accurate. There's a very high threshold of standard for all of that. All right, so rolling on forward. The third thing is process. Okay, so the process is that when you work with a client, let's say they want to sell their business, you need to explain to them how long it's going to take, what's going to be the timeline. You need to schedule the calls. There's a lot of sort of like administrative or logistical work involved in that, okay? So that's the third thing, which is usually kind of the least fun part, but actually is one of the major aspects of the job. I talked to several people, but I talked to an associate at Catalyst who told me that a lot of her job ended up being kind of orchestrating a lot of calls, making sure that this document got over here, making sure that this had been done, and that sort of thing. So it's a very common part of the process that I think people leave out or don't think about, is that you are sort of a project manager in a sense, especially at the associate level. Okay, the last thing, the fourth thing, is quality, okay? So everything that goes through the banking machine, the four levels that we explained, has to be extremely high quality. It needs to be very accurate. And the reason is that a lot of times those documents become legal materials. And what I mean by that is that there are filings and sort of disclosures and sort of legal barriers to conducting yourself in public markets, especially. Okay, so if it's a publicly listed company, for example, everything needs to be kind of explained. And it needs to be explained, accurately and logically. Let's say, for example, that we're a publicly traded company and we acquire a private company. We need to justify that to our investors. I can't just buy a private company, let's say, because my sister works there, just to give her a payout, because the money that I'm spending to do that is not completely mine if I'm a public company. I have investors, I have other people that are sort of need to approve on that decision, right? So quality and accuracy is absolutely critical to that work. So the four levels are, just to review, the analysis, the materials, the process, and quality control. Okay, now I'm going to take a moment to, I should review the chat and see if people are chatting it up. So let's jump into a average work week, because I think that it's easier to explain the actual experience. So first of all, the average work week is not really bound by what day it is. Okay, there are some banks that have a dedicated day off, and maybe they adhere to that, maybe they don't, but in general, there isn't really a lot of time away, in the sense that you're sort of always on call. The reason that is, and I'll give a metaphor here that I think is very useful, is that investment banking is whale hunting, okay? You don't need to catch a lot of whales in a year. An investment bank doesn't need to do that many M&A deals in a year. But when it has a whale on the line, it absolutely needs all hands on deck, and it needs to reel it in, and it cannot wait. Deals do not wait. So for that reason, just based on that, business model, it's not really possible that you can just fully unplug and go away especially if there's a deal on the table, okay? So when people talk about the average week, that's always going to be a factor, is that if there's a live deal, let's say one company is trying to acquire another company, you can't really just walk away from that. There's not really a lot of space in between that, okay? All right, so an average work week. I will give you an average work week. So Sunday, let's say, maybe in the morning you have some time off, let's say until noon, and you have a little bit of work that you kind of know you need to do. You have a few slides you need to do. Actually, I think a better way to frame this would be around sort of a deliverable, okay? Let's follow the life of a deliverable. Maybe that's a little easier. So Thursday, your VP calls you in to their office. They say, we're meeting with the client next Wednesday, and we're going to talk to them about a few things. We're going to talk to them about potential acquisition targets. We're going to give them sort of a strategic update. We're going to give them a market update. We're going to give them a few sort of things to chew on, okay? The VP then the MD has sort of passed this down. The VP kind of comes up with the concept, spreads out the work, says, we're going to get this done. Let's try to get it done all by Monday night so that we can review it Tuesday, and then by Wednesday we're done, okay? So Thursday, let's say you hear that at 3 p.m., you probably will then go work with the associates. The associates and the analysts will kind of work together to figure out, okay, like we have these 5 slides. Let's kind of like, you do these ones, we'll do these ones, split it all up and go, okay? Everyone goes and does their slides. Let's say they're working on other projects at the same time. So they're building out slides at some point in the next few days. They're doing some kind of review cycle. So let's say they finish a rough draft Thursday night. Let's say that's like 11 p.m. And then the next day, Friday, they get it reviewed in the morning. They have to make changes by Friday night. Friday says it's good. And then Friday night, here's what will happen. And this will happen to you. You'll get an email, and the email will say, I've got an idea. I've got a great idea. It's going to be from a managing director, and what they're going to tell you is, I've got a great idea. Instead of what you guys had done, we should do plan B. Plan B. All the work that you've done is thrown away, and now you're on plan B. So Friday night, you were going to go out. You're not going to go out. You're going to work on some slides. Saturday, you're going to come into the office. You're going to work on some slides. You're going to complain about it a lot. And then Sunday, in the afternoon, you're going to review it. Sunday morning, maybe you have a little bit of time to yourself. And then Sunday night, you'll have a call at 10 p.m. because the MD is in Europe or whatever. They're in Asia or whatever, crazy things. And they're going to tell you that they don't really like it because they never like it. Their job isn't to like it, okay? You're going to rebuild it again. You're going to start over from the model. You're going to change directions again. Monday is going to come around. You're going to work from morning until 2 a.m. You're going to get it right. And then Tuesday is going to come around. And if you're lucky, they will bless you and say, this is good. Just get it printed out and get it to me on my desk in the morning, okay? You're going to go and do that. You're going to screw it up because you're going to fold up the papers. But eventually, one way or the other, that packet is going to end up on that desk, and you will have been sleep deprived for 48 hours. That is, I think that story, that arc, you can talk to other people in banking, is such a common experience that it's almost funny. And it is, people know, everyone knows, people know, the MD knows what they're doing, the VPs see it coming, the associates kind of know, and it just happens every time like that. And I don't know if there's something that could be done better about it. What do I know? But that is a very typical experience. And so, in doing that, a lot of times you'll end up working very late. You'll end up working odd hours. But I will say that the quality of the slides that ends up going to the clients are usually very good because of this process. And they're usually very thoughtful. If you work at a good bank, that is absolutely true. But just to explain to you, the experience of doing that is absolutely painful and absolutely difficult. So let's check in on the chat. Let's see. Okay, so pull this up. I'm new to this sport, so give me a little bit of leeway. Okay. So, I want to talk about a very interesting, I have a very good analogy, I think, for the experience of being an investment banker, and that is that the first thing to remember is that you work in the service industry. And that means that you are subservient to a client. That client is a business person. Ultimately, as a junior person, you're subservient to the managing director. Investment banking is like being a butler at a very expensive restaurant. You need to make sure that the silverware is perfectly polished. Is it critically important that the silverware is perfectly polished? Probably not. But if it's wrong, it will be very clear that it's wrong. So that is why the choice of font, the slight color differences, any little error makes a big deal when you're at a Michelin star restaurant, right? So even though your role will end up in the beginning being this very minute, very unimportant seeming thing, it's important that it is done perfectly well, and that is why you're paid so well. So think of yourself as a butler. The other aspect to that is that you need to have this attitude of, yes, right away. Yes, I'll get that right away. Even when they're being extremely hurtful or annoying or doesn't make sense or whatever, the answer is always going to be yes right away. And when you get into banking, you'll find a lot of people who are able to do that. I started my career in consulting, and I remember the first client meeting that I was on, a VP was just being absolutely chewed out by a client. They were saying, why isn't this ready? You suck. Like, this company is terrible, all this stuff. And I was like waiting because I was like, oh, this client is gonna get lit up. Like, there's no way that he can just say all this stuff to this guy. This is like the worst thing I've ever heard. And the VP got on the phone and was just like, you're totally right, man. And, we'll do everything we can to fix this. Like, please understand and give us a day. It was like, I was so blown away by that. And I think that a lot of you will find that, because I think that you probably haven't experienced the true level of service that people operate at this level. And you will have to do the same. You will have to do the same. Your client isn't the bank's client. Your client is internal, but they will be unreasonable, and you will have to just kind of roll with that. That's your job. All right. So, okay, based on all of this that you've heard so far, you should ask yourself, I think, a few things, whether this is right for you or not. I think one of them is if you're willing to sort of like compress or subjugate your ego to serve others, which is not an easy thing to do. You need to sort of unleash your pride and let yourself just be a servant to the client. As I said, this is one of the highest paid service jobs in the economy. So it's important that you act as a butler. The second thing is if you can handle the stress, because there's a huge amount of stress involved. You're always on the clock, and things will always be changing, and the pressure is on, and you got to print this out by this time, and you got to do this right, and everybody's on your tail, and there's $1 billion on the line, and it's just it's not purely a mental thing. There's a physical aspect to being stressed out, and you need to kind of figure out, or maybe you'll find out, whether you can actually handle that or not. And I would imagine that a lot of people can't. It's a serious job. It's a job that has killed people. It's a job that has led to people getting addicted to drugs. It's a job that has destroyed people's relationships in their life. And you kind of need to be all in and kind of be ready to trade. That doesn't necessarily mean you're trading all of those things that I just mentioned, but it does mean that you need to be serious about it, because those are downsides which can be very real to you, and you need to come in with thought around how to mitigate some of those trade-offs and whether you want to make any of those trade-offs. Some of it will be unavoidable. I think one of the things that I learned over the summer is about sacrifice, okay? I'm a person that works all the time. I'm a person that trains 6 days a week. I work probably from 7 a.m. until 11 p.m. every single day. But sacrifice is really the things that you don't want to give up. Sacrifice ends up being the things that actually really hurt you to give up. It's going to be not being able to meet with a friend that's in town. It's going to be missing the 4th of July. It's being, missing Thanksgiving. And the reality is that that's just the trade-off they are making. For a lot of people, it's a short-term thing. It's a 2-3 year thing. They make the trade-off, they make the explanation, and then they kind of can come back. For some people, it's a lifetime thing. You don't necessarily need to decide that now, but you need to know that in going in, you're not going to have a lot of control over your time, over your experience, over what you sacrifice. It's going to basically be anything and everything. But if you spend those 2 years and make it through, then, well, we can talk more about the upsides. But that's the second thing. So the first thing was whether you can handle the hours, whether you can handle the lack of control in the service, and the second thing was the stress. The third thing is the hierarchy and the feedback. So you are going to be subservient, okay? There are going to be people, if you're an MBA associate, there are going to be 24-year-olds that you're going to answer to who are going to know way more than you about this stuff. And that's something that you need to be okay with, okay? You're going to need to understand, and you're going to need to have the emotional intelligence to be able to work with people like that and to be able to navigate that kind of an environment. So that's the things to ask yourself, whether you can handle the hours and the lack of control, whether you can handle the stress and the ambiguity, and whether you can be a part of the hierarchy and not implode. Another couple of things to talk about, whether it's right, is detail-orientedness. It's critically important that the details are right. You will need to make sure that that's spot on. It's basically the only job you have, is making sure that everything is perfectly accurate. And it's not a super fun thing to do. It's an extremely focused, pressured thing to do. Okay, let's rip through a question here. Who should do investment banking? Okay, for one, a good fit. For MBA and for undergrad, it's a little different. For MBA, someone who has prior finance experience or has prior exposure or understanding of that lifestyle is usually someone that's going to do really well. A lot of times that's someone who is either they've dated an investment banker or they're close friends with an investment banker. Those types of people are going to kind of know what they're getting into and typically be able to ride that wave pretty well. For undergrads, I think typically being very quick, being able to prioritize well, it's usually the person that's able to kind of get their work done ahead of time. I would think that it would be more difficult for the person who is kind of doing their homework at the last minute or staying up all night, although that is sort of what investment banking ends up as, so maybe not. I think one of the common things is whether it's a good fit is whether you're really all in on it or not, whether you're really all in on your career or not. Because if you're trying to balance these other things in your world, it just is really, really difficult. Like if it's really important to you to have a certain hobby that you commit to, you're probably not going to be able to do that, and you're probably not going to be a great fit. Okay, so other bad fit things is someone who has any kind of, I would say, sort of dependencies outside where you need to be have predictable hours. Someone who needs enough sleep, which you really can't guarantee. Let's leave it at those for now. All right, so I want to tie it all together, and then we'll do some Q&A. Recruiting, all right? So you're in the process of deciding if you want to go into investment banking now, okay? And it's important that you understand what an investment banker actually is, because if you don't, it's going to be very hard for you to explain that. I think that a lot of people end up doing recruitment without fully understanding it, and for that reason, they do not do well. My roommate this summer was a summer associate at Bank of America, and after the summer, we all had to kind of look at our resume and update our resume for the database. And as he was looking at that, he was like, oh, now that I know what the job is, I can't believe that I didn't put, this modeling experience that I had done at my prior work on my resume. And that's a really, I think, a really like telling example of like, had he known that this is what the job was, he would be able to sell himself better. So it's very important that you have a very good understanding of what is this job, because if you don't, it's going to be very hard for you to sell that you belong there. I think some of the things that are useful for that is our guides on OfferGoblin. We built that in order to kind of explain a lot of the things that I'm explaining now. I'll put a link in the in the description. That is a really good sort of pithy explanation of what investment banking is. We have our Goblin 100 questions, which are basically just 100 questions that help you ramp up to not just understanding banking, but understanding technicals. It's the first 100 questions that you should do when you're studying or considering to go into investment banking. So those Goblin 100 questions will kind of help to get you up to a certain base level, and then the rest of the OfferGoblin platform will kind of train you with specific bank questions and take you kind of beyond that. So the guides and the Goblin 100, that's where you're going to see excellent results. Okay, now let's see where we got with all that. Okay, I'm going to answer a few questions. All right, so what does an analyst actually do? Well, we talked about the four things. So analysis, materials, process, quality control. Pretty much what that ends up being is you're working in Excel and PowerPoint a lot. You're checking details and you're making sure that everything is absolutely perfect. That's the job. Is banking mostly finance or client service? So I would say both. I think people underestimate the client service part and think it's really just sort of modeling, because the thing is, you're not just investing. It's because it's usually, if you go to a boutique, it's not your money. And so you're always interfacing with a person and having them trust you and explaining it to them and that sort of thing. So it is a really balance of both, and that's why there's a huge sort of cultural aspect of working in banking, because you need to be able to interface with people well. It's also, your own team, yes, also that, but you need to be able to interface with external clients very well. Do you need to love finance? I think you should definitely be interested in finance. I think the more that you like it, the more you'll probably enjoy the job. I think that the people I've seen do the best are the ones who love finance the most. I personally think I think finance is very interesting. I don't think that it's, I would say, my number one passion, but I think that one of the things that I heard from someone at Goldman, which I thought was very pithy, was that you need to be an investment banker first and a tech person second. That's for tech banking recruitment, but the same applies, is that you are a banker, you are not a tech person, you're not an industrials person, you're not a consumer person, you're a finance person, and you're applying it to a specific vertical. What is the hardest part? So I think that the hardest part is not really the technical thing. I think the modeling itself is not extremely complicated. I think usually it's the pressure, the amount of time you have to put in, the interpersonal relationships, those sorts of things that I think push people to the limit. Sleep deprivation, physical aspects of the work. I think some people end up getting into drugs in some way. I don't think it's as common as it's sort of made out to be, but even just, caffeine is like insanely abundant. People drink multiple energy drinks a day or doing Zins and things like that. And that alone is really, next level in terms of drug use. It's not just an innocuous cup of coffee or something. So I think the stress I'd probably put is the hardest. Is it worth it? I think it depends. It's a trade, right? It's not a free trade. There's no money for nothing here. You are making a lot of money. You are getting a lot of prestige. You are getting a really great paid apprenticeship, but you will pay for it. You will pay for it with your stress, with your body, with your time, with your relationships. It will be very real to you. It will be sacrifices that you don't want to make. And so I would say that it is worth it if you're willing to make those trades. But it can be miserable. All right. Okay. Let's land this plane. Investment banking is helping companies and investors to execute major financial transactions. Okay? People. Helping people make decisions. Financial decisions. The lived experience is really those four things that I talked about: analysis, materials, process, quality control, and then surviving the hierarchy, the urgency, the late night revisions. Okay? The job will give you money, it will give you training, it will give you credibility, it will give you a network, it will give you a ton of options. Those are very real. It will cost you time, sleep, control, sometimes perspective. Those are real too. So the mature question is, do you understand that trade, and does it make sense for you? I don't know. That's for you to decide. If the answer is yes, and you want to take recruiting seriously, learn the job, and prepare for it well, then use the Offer Goblin guides, go through the Goblin 100, get on the newsletter, follow us on socials. If the answer is no, that's also a win. Sometimes figuring out what you don't want to do is as important as figuring out what you do want to do. You don't need to be defined by any of that. You need to follow what trade-offs make sense for you. And with that, I am Michael Neal. This has been Offer Goblin live from the University of Chicago Booth School of Business, the center of the universe. Ryan Tan remains meticulous and absent. Thank you for watching.